Welcome to speedearning.com and speedearning.in. Thank you for showing such appreciation for our videos and our training program. You have given such a response that we are always motivated to do something new and fresh for you. So we are talking about the behavior biases in process of investment decision. When you are going to make a decision for investment in a stock market or any asset class, there might be something, some factors, some psychological, some behavioral factors which can corrupt your decision. So we are just talking about that. So what is the first bias? First bias is optimism or confidence bias. When you are having continuous success, means consecutive success, you are getting the consecutive successes, and you gain one day, second day, third day, 1 month, second month, third month, month after month you are getting the profits. So you will have a confidence, and due to that confidence, your research will become shallow, obviously, because you are not afraid of the market, you are not well aware it might be there, because we are in a comfort zone, so it's okay. We are in confidence, might be called overconfidence. So overconfidence is causing some wrong decisions which are not that perfect, which were there in the beginning. So optimism is there, you are not checking the threats, what would be coming in the future, and you are making your decisions, and sometimes you will have a big loss, huge loss, which can reduce your total return. So there should be no optimism bias. You just keep checking over the period of time. Suppose since last 3 months you are gaining, but before those 3 months you would have lost something. So what were the reasons? Don't forget, just keep in your accounts, keep in your memory to take the right decisions, because in case of options, that is quite relevant. Suppose you earned in option trading for first month, second month, and there was a huge profit. So it is very sure that on the next third month, if you are doing the same thing, you will lose your entire amount, because if there was a good movement since last 2 months, so third month would be range bound, so there will be a premium decay, and you would have a loss which is unexpected, means unexpected for you only. Otherwise in market cycles it was obvious, it was a regular type of behavior. So second bias is familiarity. Familiarity means you have been doing trading in some particular stocks, some particular instruments. Someone is trading in equities, someone is trading in options, someone is trading in futures, and he is telling that I have been doing the trading in this instrument only, or this script only. So this is due to your familiarity only. If you are familiar in a single script, you can be familiar in more scripts if you are giving chance to them. So there will be a phase where you are learning, you are having the confusions, but you will have to pass through it, because there should be variety of options, variety of instruments what you can trade in. So that's why just refrain from this familiarity bias, and you should be open for all other options which are suitable for particular market conditions. So we should not bound in our comfort zone, because if we are doing something from the beginning, it is very obvious that you are comfortable with that instrument or that script, but you will have to broaden your vision, you will have to broaden your practices. That is the basic of success. And third is anchoring. Third bias is anchoring. In case of anchoring, we are holding on the old information. We have got some information earlier, and still we are taking the decision on that basis only. In case of personal life, anchoring is the most prevalent bias, because all of us might be indulging in some anchoring bias in taking our day-to-day decisions. Suppose we have tried for something in our past and we failed that time. So in future, whenever we are going to do that thing, we shall feel that anchoring bias there. So don't take your decision on old information. You just see old charts, you see the old behavior. I would suggest you to go for not only for 6 months or 1 year chart, just go for 3 years, 5 years and 10 years and try to see the whole picture. Because if you are seeing the whole picture, you are seeing the truth as well. So don't anchor on some particular information and take the decision which are not correct completely. So if you are having the piece of input, then you will get the piece of output. So try to get the proper input for proper output. Now, fourth bias is loss aversion. Loss aversion means we are having the fear of loss, because we were doing something and there was loss. So when in our training we are giving you the reasons for losses. What was the reason for loss? Sometimes someone is telling, oh, okay, whatever the reason was, it doesn't matter. Now how to get the profit? But if you are not knowing the reason of losses, if you are not knowing the mistakes in detail, how will you rectify this? So you will have to know, you will have to understand the total phenomena. You will have to know the things which you have done wrong. So that's why you can overcome the loss aversion bias. In that way, you are going to see the whole thing, whole picture, and now you are modifying your practices. You are trying to rectify the bad habits, and then you are able to get the new results, because now you are doing the things with a fresh approach. Now fifth bias is herd mentality. Herd mentality means we are moving with the crowd. We are not thinking about any right or wrong opinion. We are just seeing that what the majority is doing. If majority is going in the buying side, we are going in buying side. Majority is going in selling side, we are going in the selling side. That is herd mentality. And if you are in herd mentality, then you are going to lose the money in market, any asset class, because there is a fact: 10% winners are fetching the money of 90% losers. That is the basic of any market. So if you are following the herd, then you are going to lose the money. You will have to see the smart decisions beyond the thinking of the herd. So don't follow the crowd, just follow your instincts, your decisions and your own observation. You might be making mistakes in the beginning, but after some time you will improve your working, you will improve your thought process, you will improve your decision making, and then you will get the profit. Now sixth bias is recency bias. Recency means whatever happened recently, that is having the biggest impact on our thinking, on our decision making. So recently if we got losses, so we are buying a very little quantity because we were in losses. Recently we got huge profits, then we are buying huge volumes because we are quite motivated. Recently the market was very positive, so we are thinking it will continue in the same way, but it will not happen, because if market moved upside for last 2-3 months, then there will be a range, there will be a correction. So the fact is just opposite. That's why we are telling that don't go for recency bias. I am repeating again that you should see anything over a longer period of time. Even if you are trading for intraday, but if you take a look on 1 year or for 3-year chart, it won't give you any loss, because you are aware of the behavior of that script which was seen in past. So that will give you some idea about the future behavior, and there are some repeating patterns. So suppose there might be a 3-month up move and then 2-month downside move, then up move, then downside move, and when there are 3 little up moves, then 4th time there may be a big downfall. So there are cycles beyond the cycles, so you will have to see in longer periods. Otherwise, if you are seeing a shorter span, then you might be having imperfect picture of the phenomena. So that's why if you want to see the market, you just go and see, keep observing the charts all the time. Whenever you are having 5-minute 10-minute time, you can see, there is no problem at all. Nowadays you are having the charts in your smartphone as well, and you might be wasting your time in waiting for a bus or a taxi or something. So that time can be used, but first of all you should be convinced that whatever you are giving the input for market study, all study will be encased in future. So that should be your very clear vision about the study. And 7th bias is choice paralysis. When you are having so many choices, then it is very difficult to choose any single thing. That's why we suggest you to narrow down your choices in case of decision making. When you are going for, suppose, intraday trading, and if you want to pick one stock among 100 stocks list, then it will be very difficult. So we suggest you to go for the best sector which is moving up, and the worst sector which is moving downside, and then you are choosing one of the 3, you are choosing 2 of the 3, and that is quite logical, that is quite comfortable and clear. So we suggest you to go with narrowing or taking the right amount of information to process properly. That's why don't go for the options which can create choice paralysis. So if you are very confused, you just leave all the things, take a break, take a rest, and take a fresh look on the market after a gap. So that will give you a right approach. So if you want to take a right approach for intraday, if you wanted to take a right approach for short term, for options or long term, there are different methods to decide something, and what we are discussing in our videos in detail, very detailed. So it is according to your lifestyle, your living standard, your availability of your time, and available information to you. So you can choose on that basis, and those methods are quite comfortable for all the fellows which are getting training with us. So we were talking about 7 biases which can corrupt our investment or trading decisions. So be aware of that and try to see those biases in yourself, because if you don't admit that you are having such a problem in your thought process, then you will not be able to solve these problems. Because first step of solving any problem is to admit the mistake. So first of all, see in yourself what is the problem there. It may be to any degree, it may be a small degree or higher degree, but you will have to remove it with understanding only. Thank you very much. Bye.